I spent months building a machine learning system to tell me exactly which stocks to buy. It scans over 900 companies every day, runs them through 10 different filters, and spits out a ranked list of the best opportunities in the entire market. And the most important thing it taught me had nothing to do with stocks. Stay with me, because even if you never write a line of code in your life, what I learned building this system will change how you think about investing. Guaranteed. Here's how it started. A friend told me he made $5,000 from stock trading in 1 year. That got my attention. He told me to buy a specific stock, a small aviation company. The stock had just dropped. He said it was about to bounce back. So I put in $120, and then I watched it go down, and keep going down. That money is still sitting there, losing value, and I haven't sold it because at this point, it feels like admitting I was wrong. That's the moment I realized something. I was making financial decisions based on someone else's opinion. No data, no research, no system, just a friend who said, "Trust me." And I thought, I have a master's degree in data science. I build automation tools for a living. I write code every single day. Why am I investing like someone who's never seen a spreadsheet? So I decided to build something. Not because I thought I could build a money printer, but because if I was going to risk my money in the stock market, I wanted the decision to come from data, not from a group chat. Let me explain what I built without any technical jargon. There are about 6,000 publicly traded stocks in America. Every single day, all of them are moving. Some up, some down, some sideways. Trying to look at all of them is like trying to drink from a fire hose. It's impossible. So I built a filter. Think of it like a coffee filter. You pour in 6,000 stocks at the top. The system runs every single one through 10 different tests. And at the bottom, maybe 15 to 20 stocks drip through. Those are the ones worth looking at. What are the 10 tests? In plain English, the first few are technical. Is the stock near its lowest price in a year, meaning it's potentially undervalued? Is it starting to bounce back? Are there signs that big institutional investors are quietly buying in, like unusual spikes in trading volume? Then there are momentum checks. Is the stock's short-term trend turning positive? Are the key moving averages lining up in the right direction? Then the system checks fundamentals. Did this company recently report earnings that beat what analysts expected? Because when a company surprises Wall Street, the stock often keeps climbing for weeks. It's one of the most well-documented patterns in all of finance. It also checks whether company insiders, the CEO, the CFO, board members, are buying their own stock. If the people who know the company best are putting their own money in, that's a powerful signal. And finally, it checks risk. Is there an earnings report coming up in the next 2 weeks that could blow up the trade? Is the stock's entire sector trending downward? If so, the system filters it out. No point catching a falling knife in a sinking industry. All 10 layers get scored. The stocks that pass the most tests get ranked highest. And that ranked list is what I look at before making any trade. Here's where I'm going to be real with you. Because every tech bro on the internet will show you their winners and hide their losers. I'm not doing that. Out of roughly every 9 stocks the system flags, about 7 end up profitable. Some of those profits are small. We're talking $1.68 on a $20 position. My biggest win so far was about $5 profit on a $75 investment. That's roughly a 7% return. Not life-changing, but positive. The other 2 out of 9? Losses. And here's where it gets honest. The losses were bigger than they needed to be. Not because the system was wrong, because I didn't listen to it. I had one stock that the system flagged as a buy. It went up a little, then started coming back down. My sell signal dashboard, which I built specifically to tell me when to exit, said get out. But I thought, it'll come back. So I held, and watched a $20 position bleed down to 15, then 14. It's still sitting there. The system told me to sell. I didn't sell, because I'm human. And humans are terrible at selling things at a loss. We'd rather watch the number keep dropping than admit we were wrong and move on. So here's the big takeaway. The thing I spent months building, the machine learning, the 10 signal layers, the data pipelines, the scoring algorithm, none of that is the real edge. The real edge is that the system has no emotions. It doesn't get excited when a stock is up. It doesn't panic when a stock is down. It doesn't hold on to a loser because selling feels like failure. It doesn't chase a hot tip from a friend. It doesn't check the price 17 times a day hoping the number changed. The system just looks at the data and says, buy, hold, or sell. That's it. No ego, no hope, no fear. And every time I've lost money, it wasn't because the system failed. It was because I overrode it. I let my feelings make the decision instead of the data. I held when I should have sold. I bought on impulse when the system didn't flag anything. Every great investor in history has said some version of the same thing. The market doesn't care about your feelings. The stock doesn't know you own it. The price doesn't care that you believe in the company. And the longer you let emotion drive your decisions, the more money you'll leave on the table. Or worse, lose. I didn't need machine learning to learn that lesson. But building the machine learning is what finally made me understand it. Because when you have a system that tells you exactly what to do and you still don't do it, you can't blame the information anymore. You have to look in the mirror. Now, you don't need to build a machine learning scanner. That's not the point of this video. The point is this: you need a system, any system, something that makes your investing decisions before the emotions kick in. It can be as simple as 3 rules written on a sticky note. Rule 1. I only buy stocks that meet these 3 criteria. Rule 2. I sell if the position drops more than 5%. Rule 3. I sell if it hasn't moved in 4 weeks. That's it. That's a system. It doesn't need Python. It doesn't need machine learning. It doesn't need a master's degree. It just needs to exist before you open your trading app. Because the moment you're staring at a red number on your screen, your brain stops thinking rationally. You start hoping. You start bargaining. It'll come back. I'll sell when it gets back to even. This is just a dip. Those aren't strategies. Those are emotions wearing a strategy costume. Write your rules down. Set your stop losses before you enter a trade, not after. Decide how long you'll hold before you buy, not while you're watching the price drop. And when the system says sell, sell. Don't negotiate with the number. The number doesn't negotiate back. If you do that, just that one thing, you're already ahead of 90% of retail investors. No algorithm required. I built a machine learning stock scanner hoping it would tell me what to buy. What it actually taught me is when to stop listening to myself. The best tool in investing isn't an algorithm. It's discipline. And the best system isn't the most complex one. It's the one you actually follow. If you're just starting to invest, or if you've been investing emotionally and want to fix that, subscribe. I'm putting out real, unfiltered content about building wealth, the wins, the losses, and everything in between. Drop a comment. Do you have a system for your trades, or are you still going off gut feeling? No judgment. I was there a few months ago. Let's build better systems together.